The Ministry of Finance Incorporated MOFI has begun the restructuring of federal government assets with the assumption of ownership, control and management of all outstanding federal government of Nigeria equity in all existing electricity successor companies from the defunct Power Holding Company of Nigeria (PHCN). Minister of Finance and Coordinating Minister of the Economy Mr. Wale Odun recently issued an order to the Board of Directors of MOFI to terminate the power of attorney (POA) granted by MOFI to the Bureau of Public Enterprises (BPE) in 2012 and take over the stakes in the 11 power distribution companies (DISCOs). MOFI is a statutory corporation so established by the MOFI Act 1959. The legislative intendment of MOFI Act was and remains that the corporation is constituted as the holder and manager of all assets acquired by way of debt or equity capital from the funds of the federal government of Nigeria. MOFI in a statement noted that these assets include the investments in the defunct National Electric Power Authority, which under the repealed Electric Power Sector Reform Act 2005 (EPSRA) evolved into Power Holding Company of Nigeria PLC and subsequently unbundled into the various electricity successor companies, including the 11 distribution companies (DISCOs). Fitch Ratings has placed Union Bank of Nigeria's PLC (UBN) Issuer Default Ratings (IDRs), Viability Ratings (VR), and National Ratings on Rating Watch Negative (RWN). UBN's government support rating of no support is not affected by this rating action. The rating agency in a report this Monday disclosed that the Rating Watch Negative (RWN) follows the Central Bank of Nigeria's CBN announcement on 10th January that it has dissolved the board and management of 3 Nigerian banks, including UBN, as a result of regulatory non-compliance, corporate governance failure, disregarding the conditions under which banking licenses were granted, and involvement in activities that pose a threat to financial stability, among other infractions. The RWN, it added, reflects the uncertainty surrounding the background to the CBN's intervention, the potential for further regulatory actions, and the negative implications for UBN's standalone credit profile, particularly related to corporate governance risk and liquidity pressures arising from potential funding instability. Fitch expects to resolve the RWN within 6 months once there is more certainty regarding the CBN's intervention and the implications for UBN's standalone credit profile. Nigeria's headline inflation rate increased in December 2023 to 28.92% relative to November 2023 headline inflation rate, which was 28.20%. Data from the National Bureau of Statistics (NBS) shows an increase of 0.72 percentage points when compared to November 2023 headline inflation rate. On a year-on-year basis, the headline inflation rate was 7.58 percentage points higher compared to the rate recorded in December 2022, which was 21.34%. And on a month-on-month basis, the headline inflation rate in December 2023 was 2.29%, which was 0.2% higher than the rate recorded in November 2023, which was 2.09%. A British court has ruled stolen asset worth £6.9 million or $8.9 million can be returned to Nigeria. It comes after Jersey's Attorney General served a forfeiture notice to the Royal Court in Jersey in November. The BBC reports that court ruled the money deposited in a Jersey bank account was likely stolen by officials in the Nigerian government in 2014. The return of the assets will now be negotiated with the Federal Republic of Nigeria. The transfer money was disguised as government-sanctioned contracts for armed purchases during incursions by Boko Haram in Nigeria between 2009 and 2015. The government of Jersey said it was probable that most of the funds meant for legitimate arms deals were diverted through foreign bank accounts to and from shell companies. Shell has reached an agreement to sell its Nigerian onshore subsidiary, the Shell Petroleum Development Company of Nigeria Limited (SPDC), to Renaissance, a consortium of 5 companies comprising 4 exploration and production companies based in Nigeria and an international energy group. A statement by Shell disclosed that completion of the transaction is subject to approvals by the federal government of Nigeria and other conditions. The transaction has been designed to preserve the full range of SPDC's operating capabilities following the change of ownership. This includes the technical expertise, management systems, and processes that SPDC implements on behalf of all the companies in the SPDC joint venture. SPDC's staff will continue to be employed by the company as it transitions to new ownership. Following completion, Shell will retain a role in supporting the management of the SPDC JV facilities that supply a major portion of the feed gas to Nigerian Liquefied Natural Gas (NLNG) Limited to help Nigeria achieve maximum value from NLNG.